Gold just hit a new all-time high again. And if you've been watching the headlines, you've probably seen the same celebration everywhere. Investors cheering, headlines screaming about safety and wealth preservation, central banks quietly hoarding more of it than they have in decades. But here's the thing nobody's really saying out loud. When gold goes vertical like this, it's not usually because everything's fine. It's because something's broken. Let's rewind for a second. Gold doesn't produce anything. It doesn't pay dividends. It doesn't grow earnings. You can't eat it, burn it for energy, or plug it into a machine that prints money. It just sits there. Shiny, heavy, expensive. And yet, for thousands of years, humans have agreed on one very strange idea, that this metal matters. Right now, it matters more than ever. Gold prices have surged over 40% in the last 18 months. Central banks bought more than 1,000 tons of it in 2023 alone. That's the highest level of official gold buying in 55 years. So the question isn't whether gold is going up, it's why everyone with real power is suddenly acting like the world's about to get a lot more unstable. Here's how gold is supposed to work. When inflation rises, people buy gold to protect their wealth. When currencies lose value, gold holds steady. When trust in governments or banks starts to crack, gold becomes the fallback. It's the asset you turn to when you don't trust anything else. That's the theory. But here's what's actually happening right now. Inflation in most major economies has been cooling. Interest rates are still elevated, which traditionally makes gold less attractive because you're giving up yield by holding it. And stock markets, despite all the chaos, have been resilient. By the old playbook, gold should be flat or falling. Instead, it's ripping higher. That disconnect is what makes this interesting. Because if gold isn't rallying on inflation fears or currency collapse, then it's rallying on something else, something deeper, something that doesn't show up neatly in a CPI report or a Federal Reserve statement. Let's talk about who's actually buying. Retail investors are part of it, sure. People see the price going up and they chase. Fear of missing out is real. But retail doesn't move markets like this. Central banks do. And central banks have been on an absolute buying spree. China, Russia, India, Turkey, Poland, Singapore, countries that don't usually agree on much, have all been loading up on gold at a pace we haven't seen since the 1970s. Why? Because they're trying to get out of dollars. Not entirely, not overnight, but slowly, strategically, they're reducing their dependence on U.S. Treasury bonds and dollar reserves. And the easiest, most neutral thing to buy when you're trying to diversify away from the dollar is gold. It's not a conspiracy, it's just math. If you're a central bank in Beijing or Moscow, and you're watching the U.S. government run trillion-dollar deficits while weaponizing the dollar through sanctions, you start asking yourself a very reasonable question. What happens if we're next? Now let's zoom out even further. Gold's rise isn't happening in a vacuum. It's happening at the same time as a couple of very uncomfortable trends. Global debt is at record levels. We're talking about over $300 trillion in total debt across governments, corporations, and households. That's almost 3.5 times global GDP. You can't grow your way out of that. You can't tax your way out of that. The only way out is to either default, which nobody wants, or inflate your way out, which is exactly what governments have done throughout history. And here's the kicker. When you inflate your way out of debt, the people holding that debt, the bondholders, the savers, the retirees, they're the ones who pay the price. Their purchasing power gets silently eroded. Gold doesn't fix that, but it does protect against it. And that's why smart money, the kind of money that moves before the headlines catch up, has been rotating into gold for months. But let's pump the brakes for a second, because there's another side to this story, and it's not pretty. Gold rallies like this have happened before. In the late 1970s, gold went from $35 an ounce to over $800 in just a few years. People thought it would go to $5,000. Some thought it would replace the dollar entirely. Then Paul Volcker, the Fed chairman at the time, jacked interest rates up to 20%. The economy tanked, inflation broke, and gold collapsed. It took 25 years to get back to those highs. The people who bought at the top got destroyed. So yes, gold is rallying. Yes, there are real structural reasons behind it. But that doesn't mean it's a one-way ticket to wealth. It means we're in a moment of extreme uncertainty, and extreme uncertainty creates extreme moves in both directions. If you're buying gold right now because you think it's going to the moon, you're not investing, you're speculating. And speculation works until it doesn't. Here's the uncomfortable part nobody wants to talk about. If gold keeps rising like this, it's not a sign of strength, it's a sign of fear. It means institutions, the ones with access to information we don't see, are preparing for something. Maybe it's a debt crisis, maybe it's a currency crisis, maybe it's a geopolitical event that reshapes the global order. Or maybe it's all three at once. Because here's the thing, the global financial system runs on trust. Trust that the dollar will hold value, trust that governments can pay their debts, trust that central banks know what they're doing. And when that trust starts to fracture, even just a little, gold becomes the obvious trade. But here's the irony. If things get bad enough that gold actually becomes the global safe haven again, the way it was before 1971, then we're not talking about investment portfolios anymore. We're talking about a world where the basic assumptions of modern finance have failed. And in that world, you're not celebrating your gold position. You're using it to survive. So let's bring this back to now. Gold is at all-time highs. Central banks are buying, retail investors are piling in, and the financial media is calling it the ultimate hedge. But here's what you need to understand. Gold doesn't go up because things are good. It goes up because things are uncertain. And right now, the level of uncertainty in the global system is higher than it's been in decades. We've got wars in multiple regions. We've got the highest debt levels in human history. We've got central banks that printed trillions of dollars in the span of 2 years and now are pretending it won't have consequences. And we've got a global population that's angrier, more divided, and less trusting of institutions than at any point in modern memory. So yeah, gold is going up. But the question isn't whether you should own gold. The question is, what kind of world are we pricing in when gold becomes the most obvious trade on the board? And here's where it gets even stranger. Most people buying gold right now aren't preparing for collapse. They're preparing for protection. They think gold is a way to stay safe while everything else keeps working. But history doesn't really support that. Gold performs best in two scenarios: mild inflation with currency instability, which is manageable, or total systemic breakdown, which is not. We're not in the second scenario yet, but we're closer than most people realize. And the fact that gold is behaving like we're already halfway there should make you stop and think. Because markets are forward-looking. They price in the future, not the present. And if the market is pricing in a future where gold is the best place to be, then what exactly is that future supposed to look like? So here's where we land. Gold is at all-time highs. It might go higher. It might double from here. Or it might crash spectacularly the moment central banks get inflation under control and confidence returns. Nobody knows. But what we do know is this. When the safest asset in the world starts acting like a momentum trade, it's not a sign that everything's fine. It's a sign that nobody's really sure what happens next. And maybe that's the scariest part of all.